Hello everyone, welcome to the daily markets video wherein I talk about the market action of today and then I talk about the learnings and then finally I talk about my insights regarding the future. So without further ado, let's jump on right into the analysis. So starting with the weekly time frame, I want to share some important updates regarding the weekly candles. So as you can see over here, in the weekly time frame, there is no update on the range as we are still range bound. But the important observation over here is I was a lot of fearful when the 5-day moving average was down and was about to cut and have a bearish crossover. But since the start of the week, it seems like there's a lot of upthrust, and finally tomorrow is Friday and we are supposedly in a better position to close the week above the 26-day moving average. So why is this important? It is important because on the weekly time frame, we are again entering into a bullish zone. Now, when we get a higher time frame confirmation, then there is a very high chance that the same appears into the lower time frame. So if the weekly charts are bullish, then there is a very high chance that the daily chart and the intraday chart will follow along at some time. So on the weekly charts, right now, we are seeing no such signs of bearish crossover. Secondly, if we close above this range in any time in the next 2 weeks, then that is going to be extremely bullish. And that is going to pave the way for the Christmas rally. So keep a close eye on this range. So far, we have held on to the 50-day moving average, that is the cream line. So far, we have nicely, holded the red line, that is 26-day moving average. And now we almost reclaimed the 5-day moving average, that is the blue line. And we are very uniquely positioned to get a really nice rally. So stay tuned and let the Friday session close, and then I'll talk about the broader time frame, that is this weekly chart, in the weekend update. So now let's draw our attention to the daily time frame. So what I want to discuss in the daily time frame is a key development that happened today. So let me show you. So this is the daily time frame, and I had a idea that, let's draw a Fibonacci retracement from the most recent high and the most recent low. So I did that. I plotted the Fibonacci range and look at what happened today. So the most important thing that should draw our attention is yesterday I told that we need to reclaim the 26-day moving average. And then eventually the long supply is going to be the Bollinger Band middle, that is the median range, that is yellow, and the cream range, that is 50-day moving average. So today we have reclaimed the 50-day moving average on a daily time frame, which is a very, very big thing. Why? Because once we reclaim the 50-day moving average over here, and if we stay above it or we sustain it, then this is going to be a very, very bullish sign. Now, I want to warn everyone that it's not like everything is, okay, and now everything is bullish. We need to wait for the confirmation as traders. So over here, you can see 1, 2, 3, 4, and 5 days of blastering rally. So this level today got reclaimed. So we need to stay above it because there are two important things that are coming on our way. The first one is tonight, Apple is going to release its earnings. And for the most part, it's going to be reasonably good. Why I'm saying this is because all the, big techs, that is Magnificent 7, have reported at least a beat in earnings estimate from top line and bottom line. So even if Apple doesn't come out with a stellar quarter, and even if it beats the estimates by a marginal amount, then that is going to be very, very bullish. Secondly, tomorrow, Friday, that is pre-market, there is going to be a non-farm payroll announcement. So that data release is going to be very, very, volatile. So until and unless we close tomorrow above the 50-day moving average, even if we have an inside day tomorrow, that would be a very, very good sign. But let's say for some reason, let's say some black swan event happens and Apple comes out with a very bad guidance, or let's say non-farm payroll, data release jumps a lot, and let's say that paves the way for the Fed to increase the rate again, then we will have a, downside. So what am I looking for? So my initial support is going to be this exact white line that you see that is developing, which happens to be the anchored VWAP. And if let's say we stabilize tomorrow and let's say we have an inside day tomorrow, then my resistance is going to be this 0.618 level. So now on the upside, there is no major resistance level apart from this R1 level, the red line that you see over here. So what do I think of the coming week? I think that in the next week, we should be testing this R1 level, that is the new monthly pivot level, that is the the immediate point of resistance. And on the support side, as I said, the P0 and the anchored VWAP will be acting as a very good support. And the anchored VWAP, to give you an actual level, right now it is sitting at 14,761. That is this one. So I would suggest that be mindful of these levels. There is a very high chance that we will consolidate into this zone and then go higher. So as I said in previous days video, like this is the bottom of 2023 as of now. We have seen the only risk is, let's say the inflation print comes higher, or let's say if it's the crude oil jumps higher. So all those macro factors may have a risk. So let me show you on a broader time horizon what is happening. So if you look at the daily charts, right, you can see that even now, even still, we are making lower highs and lower lows. So what do I mean over here? This was the high, again lower high, again lower high, again lower high. So we need to, for any trend reversal or any trend change, we need to have a higher high and higher low. So right now we have a higher high, but we don't have a higher low. So what I anticipate, or what I think is, it's gonna go like this, and then take support on this support zone and then go like this. The exact W pattern that I was talking about. Now in the most optimistic scenario, these levels get broken and its straights go up. If it goes straight up, then my resistance exactly would be this R1 level. So that's my take on the daily time frame, and I'm going to discuss a lot of other risk in the next part of the video, wherein I will show you what are the important events. But as of now, considering this week, it's only the non-farm payroll and the Apple earnings. So that's going to happen. Apple earnings are going to happen today, and the non-farm payrolls will be released in the pre-market session just before the market close. I think it's 1 hour before. So keep a close eye on these levels, and that's my take on the daily time frame. So now let's jump on to the intraday time frame. So today intraday was very, very challenging, not from an analytical point of view, but from a psychological point of view. And at some point, every trader will have to face this. So let me discuss what happened today and how I tackled it in detail. So if you go to the intraday time frame, we had a massive gap up today. So we almost gapped up 1% on Nasdaq contracts, which is fairly rare. So I was thinking, okay, we are gapping up. So what's my next levels? So if you see over here, if you see over here, the daily time frame, the resistance was sitting at 50-day, that is this one, and 26-day, that is this one. So since we gapped up in the initial session as well, this resistance level was out of the question, because we gapped up above it. So the obvious next resistance was going to be the 50-day moving average, that is this one. So it tested very beautifully. So let me show you. This is 14,950, right? Look at the intraday time frame and look at the initial resistance that we got. It is 14,950, that is over here. We got an initial rejection, and then we again bounced back, and then again we got a very little rejection, and then we bounced. So my session, like my value in trading today was, I was patient and I waited for that opportunity. Once it hit 950, at that time I took a very small position trade, because I knew that my rule is I don't trade within 30 minutes or 45 minutes of the opening session. So what I did was I did only 2 contracts, and that too short over here. So 950 was my short, and I got out at 15 points, but it was obviously a very, good move, but I was only able to capture 15 points. And then after that, I was just waiting for the R1, R2 to breach, but that didn't happen. So shockingly, we closed, or we are approaching a very high, levels as far as daily charts is concerned. Why? Because look at this level, almost around 15,000, and look at the daily time frame. We don't have any, active resistance above 14,960. So that is why the value today, or the premium today in the intraday time frame, was to get a short on 14,950 and then grab as much as you can, and then just do not trade for the entire day. Because whenever you see for Nasdaq contracts, to get a move of 1.5%, 2% in a day is a very, very normal thing. So that is why I didn't want to go against the trend. The first shot at the resistance was a very good shot, and then I just watched the markets. So this is my take on intraday. And let me tell you the story of the VIX as well, because VXN was making lower highs and it was not able to reclaim the S1 supply. So I knew that at least it's going to be a stable but an up day. So as you can see over here, VXN reflects the same. Also, one important development on the VXN is we are approaching an important support zone which coincides with S1 and the lower Bollinger Band. So what do I mean over here? Tomorrow happens to be the non-farm payrolls report, which is normally very volatile. So expect the VIX to bounce from S1 level, that is 19.3. So just a daily chart observation from the VIX, we are approaching the support level, so we need to be careful. And so let's go to the economic calendar. So if you can see over here, the Friday we have ISM services and ISM data releases on the 7 o'clock. That is half hour past the opening session, so be mindful of that. So I hope you learned a lot and got a good insights into what is happening and what's about to happen. So do your risk management, keep learning, and keep growing. And thanks for watching, and please feel free to like, share, subscribe,